Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Array Digital Infrastructure Inc. Annual Report. Array Digital Infrastructure Inc. offers a wide range of businesses and services to its customers. The company provides wireless telecommunication services in the United States, including voice, messaging, and data services. In addition to these core services, Array Digital also offers various devices such as handsets, tablets, mobile hotspots, home phones, and routers. The company's product offerings extend beyond devices to include wireless essentials like cases, screen protectors, chargers, and memory cards. It also sells consumer electronics, including Bluetooth audio products, Wi-Fi-enabled cameras, and networking products. Array Digital Infrastructure provides its customers with the option to purchase devices and accessories under installment contracts. Furthermore, the company offers various services such as wireless roaming, wireless eligible telecommunications carrier, and tower rental services. These services cater to both individual consumers and businesses, as well as government institutions. The company's diverse range of products and services are made available through multiple channels, including retail sales, direct sales, telesales, e-commerce, resellers, and independent agents. Array Digital Infrastructure also partners with third-party national retailers to expand its reach and provide convenience to customers. With a presence in the market since 1983, the company has established itself as a significant player in the wireless telecommunications industry. As a subsidiary of Telephone and Data Systems, Inc., Array Digital Infrastructure continues to grow and evolve to meet the changing needs of its customers. The stock price of Array Digital Infrastructure, Inc., NYSE, AD, has experienced a significant surge in the past year due to several transformative strategic initiatives and strong financial performance. The company's transformation from United States Cellular Corporation to a pure-play tower business in August 2025 was a major catalyst for this growth. This restructuring enabled Array to focus on shared wireless communications infrastructure, leading to substantial asset sales and special dividend distributions. The sale of its wireless operations and spectrum assets to T-Mobile generated significant capital, allowing the company to issue a $23 per share special dividend to shareholders. Additionally, the sale of spectrum licenses to AT&T further boosted the company's financials, resulting in another special dividend of $10.25 per share. The positive momentum continued with Array's strong financial results for the fourth quarter and full year 2025. The company reported a significant earnings beat, with diluted earnings per share of $0.48 for Q4 2025, compared to $0.13 in Q4 2024. Site rental revenues increased by 51% year-over-year, contributing to the company's net income of $169.7 million. The market's positive reevaluation of Array Digital Infrastructure is evident in its stock price increase over the past year. The company's optimistic guidance for 2026, projecting total operating revenues between $200 million and $215 million, and adjusted EBITDA in the same range, signals confidence in continued tower growth and further spectrum monetization. Overall, Array Digital Infrastructure's strategic initiatives and strong financial performance have driven its stock price increase over the past year. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline are multifaceted and influenced by various market and operational factors. Revenue growth is primarily driven by increasing demand for tower infrastructure due to growing mobile data consumption. This trend is further fueled by the monetization of remaining spectrum assets, completion of Verizon and T-Mobile spectrum transactions, and site rental revenues from new tenant lease executions. Additionally, interest and dividend income has increased due to higher interest earned on proceeds from the sale of wireless operations. On the other hand, revenue decline is largely attributed to factors such as tenant churn, competition from other tower operators, changes in mobile data consumption patterns, and the sale of wireless operations and select spectrum assets. Furthermore, loss or financial difficulties of key tenants may decrease revenues, while increasing competition in the tower industry may negatively impact future growth and increase costs. Overall, revenue growth is driven by a combination of market demand, strategic transactions, and operational efficiencies, whereas revenue decline is influenced by external factors such as competition, changes in consumer behavior, and financial challenges faced by key tenants. The net income of the company underwent significant fluctuations between 2023 and 2025. Initially, it decreased from $69,193 in 2023 to -$31,578 in 2024. However, this trend reversed in 2025, with a substantial increase to $172.3 million due to higher interest income and favorable tax adjustments. The profit margins also experienced changes during the period. The operating income margin saw a decrease from 2024 to 2025, primarily due to the sale of wireless operations and associated losses. Conversely, it increased from 2023 to 2024, driven by growth in site rental revenues and equity earnings. The net income margin followed a similar pattern, increasing from 2023 to 2025. The decrease in operating income margins in 2025 was largely attributed to the sale of wireless operations, which resulted in significant losses. This contrasts with the increase observed between 2023 and 2024, where growth in site rental revenues and equity earnings contributed to higher profit margins. The company's financial performance indicates a positive trend in its operating cash flow. The data from the past 3 years shows that the net cash provided by operating activities has been steadily increasing. In 2023, the company generated $49.4 million in operating cash flow, which rose to $38.4 million in 2024 and further increased to $75.1 million in 2025. This upward trend suggests that the company is efficiently managing its operations and generating sufficient cash to meet its financial obligations. As a result, it can be concluded that the company is indeed generating positive operating cash flow. The company's debt level has undergone significant changes over the past year. Initially, the debt level decreased substantially due to repayments, with a notable increase in repayments on long-term debt agreements from $248 million in 2024 to $875.3 million in 2025. However, this trend is contradicted by another summary stating that total long-term debt increased by $551 million compared to December 31, 2024. Despite the inconsistency, it appears that the company's interest expenses have indeed changed significantly. The interest expense increased by a substantial margin of plus 128% in 2025 due to a new term loan. Additionally, the total interest expenses have also seen a significant increase, with a net change of plus 15,817. The company has made several strategic moves through acquisitions and divestitures. In terms of acquisitions, the company has purchased Advantage Spectrum, LP, and King Street Wireless, LP, as well as entered into agreements to acquire spectrum from Verizon and T-Mobile, pending regulatory approval. On the other hand, the company has also engaged in divestitures, selling certain wireless spectrum licenses to both Verizon and T-Mobile. This includes Oz, cellular, PCS spectrum to Verizon, and 700 MHz and 600 MHz spectrum to T-Mobile. Additionally, the company conveyed USCC EIP LLC and USCC Receivables Funding LLC to T-Mobile on August 1, 2025, and dissolved the USCC Master Note Trust on July 31, 2025. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company made 2 special payments in 2025, one on August 19 for $23 per share and another on February 2 for $10.25 per share. These payouts resulted in a total of $1.986 billion being distributed to shareholders that year. In addition to dividend payments, the company also engaged in share buybacks during 2025. Specifically, it repurchased 328,835 common shares for approximately $20.9 million. This move demonstrates the company's commitment to returning value to its investors and reducing the number of outstanding shares on the market. Concerns have been raised regarding the accumulation of inventory, which has reached an alarming level of $178,700. This significant buildup poses a substantial risk to businesses and organizations, as it can lead to wasted resources, reduced efficiency, and decreased profitability. The issue of inventory buildup is particularly concerning due to its potential impact on supply chain operations. When inventory levels become too high, it can disrupt the smooth flow of goods and services, leading to delays, increased costs, and strained relationships with suppliers and customers. That concludes the financial summary for Array Digital Infrastructure Inc. Feel free to comment below, and I will be happy to answer them when possible.